office on the employer's premises. Right? You have to have, your home office has to be your principal place of business. Right? And so if you're an employee and you're working for somebody and they give you an office, that's your principal place of business, at work, where your office is. So even though you may do work at home, and even though it may be used regularly and exclusively for business purposes, right, the fact that you have, that your principal place of business is somewhere else, means you cannot deduct a home office deduction. So of all those people there, B, an employee that has an office with his employer.
Well, that's confusing because here you are, I'm a doctor and I work at a hospital, I have an office, but I have a home office. But my home office can have the deductions. I found that to be confusing.
All right, remember we talked about Dr. Solomon, right? Dr. Solomon was a surgeon. The hospital did not give him an office, all right? The IRS, so he had a home office to do his billing, call patients, review charts, okay? But the IRS said, no, but your principal place of business is in the operating room. Therefore, you can't deduct your home office because your principal place of business is in the hospital, even though he didn't have an office to do that, right? What the Supreme Court said was your principal place of business can include where you do substantial administrative activity. So if the hospital did not give him an office for which to perform administrative activities, managerial and administrative activities, and he did that in his home, then that would be a home office. Now if the hospital gave him an office, okay, and he just says, it's too small, I don't like it, I'm going to go home and do it, then he would have been, he couldn't deduct it.
Couldn't D also apply that question, Sue? Because it's for the employer's convenience, not the employee's convenience?
No, again, because that's the, where's this employee's principal place of business? In the home.
Or be least likely to qualify.
Okay, that's home office. I don't know, but I think there used to be a question on the test that basically talked about this. Didn't get into the allocations between classes and all that. But I don't remember, I don't know, am I right one that's different? I don't know what I'm doing.
Well, don't put me there.
See all the confused looks on
I forgot about classroom degree.
So, that's why you gotta read, reread the text, and I don't know what else to tell you, but. Okay. Back to page 3-20, back to chapter 3. There's a lot in that chapter 3. I think I gave you in the handouts the Schedule SE, so you may want to pull that out. Self-employment tax. you're talking about on your 1040, line 57. Says self-employment tax attached, Schedule SE. You said if you are self-employed, that is, you are filing a Schedule C, all right, you have to pay your own Social Security tax and your own Medicare tax. If you're an employee, right, the employer takes half of it out of your check, right? You pay half of that tax, the employer matches half. Right? If you're self-employed, you pay it all. So for the self-employment tax, you start off with your self-employment income. That's your Schedule C income. Right? You Schedule F income for farms and that, but which studies Schedule C. So you take your Schedule C income times 0.9235. Right? So you take your self-employment income, your Schedule C income, times 0.9235, and you get self-employment income subject to the self-employment tax. So they don't tax 100% of it, right? They only 92.35% of it is subject to the self-employment tax. You take your self-employment income subject to the tax into two components. You take that times 12.4%. Up to a maximum income of $117,000. So you're only going to pay the Social Security tax. You're only going to pay the Social Security tax on the first $117,000 of Schedule C income. That changes every year. All right, for 2014, it's $117,000. So if I make $118,000, I don't have to pay tax on that extra $1,000. I'm done, right? 12.4, by the way, is 6.2 if you are an employer, 6.2 employee is 12.4 for Social Security. So if you work for somebody, you ever look at your W-2, right, and you got your wages, they would have taken 6.2% out for Social Security. But the Social Security tax is 12.4. That's because your employer matches it, pays it for you. I mean, the employer has to pay it. But if you work for yourself, you've got to pay the whole thing, 12.4%. So you take up to the first $117,000 of self-employment income. Again, if my Schedule C shows a $1 million profit, I don't take $1 million times 0.9235 times 12.4, right? I take $1 million times 0.9235. I'm sorry, I would take 117,000 times 0.124, because that's the maximum that I pay self-employment tax on, Social Security tax on. Yeah.
How long, that 117,000? Is it like per year or over time?
No, that's per year. Oh, well, it's for 2014. Every year it goes up. Right, so 2015 it might be.
If I made $125,000 a year.
Right.
So the next year I'm still a high paid salary. So it would be for that year that I would pay that 117.
That's right. Yeah, next year you look at your Schedule C and the base might be 120,000. Yeah. So yeah, every year is different. And this is a year of tax. Don't carry it, just figure out your tax for that year. The Medicare tax is 2.9%, right, which is 1.45% employer, 1.45% employee is 2.9. Again, if you ever look at your W-2, or you look at your pay stub, and you say, hey, wait a minute, I made $100. They took out $2.90 for Medicare, right? That's because you have to pay $100.45. It would take out $1.45 for Medicare. That's because that's what your Medicare tax is. Your employer would match it. So the employer would kick in another $1.45, and that's how you would come up with your $2.90 on $100. Right? You're self-employed, you pay the full 2.9%. Unlimited. There is no base. If you have $1 million of Schedule C income, you will pay $1 million times 2.9%. There is no cap for Medicare. There's a cap on earnings for Social Security. There is no cap for Medicare. So as much money as you earn, 2.9%. And then you add your Social Security tax plus your Medicare tax, that gives you your self-employment tax. Right? Of which 1/2 is deductible in arriving at AGI. Line 27. Right? So again, if you look at line, on your 1040, line 57, that's your self-employment.